Hey folks, welcome back to Whiteboard Invest. The red is spreading throughout the crypto world today. Buckle up, it's going to be a wild ride. First off, Ethereum Supply Crunch Looms, with ETFs Approval through observing whale activity. Next up, updating about Cardano's price loss. Is it time to scoop more ADA? Meanwhile, Ripple's CTO issues, important tokenization explanation, and some top-performing meme coin price updates. That's the highlight. Let's dive into the details right away. Firstly, the approval of spot Ethereum ETFs could trigger a major supply crunch for the second-largest cryptocurrency. Right now, the amount of Ethereum available on centralized exchanges has dropped to an 8-year low, with only 12.78 million ETH available, which is about 11% of the total supply. This is happening just as investors are pulling their ETH from exchanges, signaling that they expect the price to rise and don't plan to sell anytime soon. The recent approval of several Ethereum ETFs by the US SEC is expected to boost demand for ETH significantly. We've already seen how successful spot Bitcoin ETFs have been since their launch in January, now holding 800,000 BTC. Mara Schmidt, CEO of Alluvial, thinks Ethereum could see similar demand, potentially leading to a huge demand shock. She points out that if $20 billion is pulled from the market, it could dramatically shift supply and demand dynamics, something we haven't experienced before. We're already seeing a surge in institutional activity around Ethereum. Blockchain analytics platform Into the Block noted that anticipation for these ETFs pushed on-chain trading volume to a 2-year high of $15.98 billion, driven largely by crypto whales. Of this amount, $14.33 billion came from transactions over $100,000, showing that big players are getting involved. Into the Block explained that the approval of ETH ETFs is a big step for cryptocurrency acceptance and will likely increase whale activity, suggesting growing confidence from institutions and investors alike. The shifting landscape, marked by substantial on-chain trading volumes and institutional interest, points to a potentially significant movement in the market. With ETH supply dwindling on exchanges and demand about to spike, we could be on the verge of some major market shifts. In addition, Ethereum's core developers are gearing up for the Pectra upgrade set for the end of Q1 2025. This upgrade will bring in the Ethereum virtual machine object format with around 11 new Ethereum improvement proposals. One highlight is PeerDAS, a data availability solution that improves data distribution and network resilience, addressing current scalability issues. Another key change is replacing EIP 3074 with EIP 7702, introduced by Vitalik Buterin, allowing externally owned accounts to function as smart contract wallets, enhancing security and user experience. Pectra's architecture includes the Prog upgrade on the execution layer and the Electra upgrade on the consensus layer, aiming to optimize transaction processing and network consensus. While some proposals, like Verkle trees, may be delayed until a future hard fork named Osaka, the overall focus is on making Ethereum more efficient and robust. Next, Cardano has been struggling recently, losing 5.42% of its value in the last 7 days, making it one of the worst performers among the top 20 cryptocurrencies. With ADA's price sitting at 0.45, many are wondering if now is the time to buy more. To dive deeper, let's look at some on-chain analysis. According to Sentiment, the ratio of daily on-chain transaction volume in profit to loss is currently 0.827. This means more transactions are ending in a loss than in profit. Historically, when this ratio drops, ADA tends to bounce back. For instance, in February, the ratio hit 0.722, and the price rose from 0.57 to 0.73 within weeks. Similarly, in April, a dip in this ratio preceded a price increase from 0.43 to 0.52. Given this pattern, AD might drop further to around 0.42, but there's also a good chance it could rebound by 20% to 0.50 soon. Another metric to watch is the price DAA divergence, which measures network activity through daily active addresses, DAA. Right now, the price DAA is at 38.88%, signaling a potential buy opportunity since a buy signal is usually triggered when this metric is below 0.50. This suggests it might be a good time to start dollar cost averaging, DCA, into ADA before the price potentially pumps. However, it's important to note the overall volume of transactions on the Cardano network. While on-chain data shows an increase in buying and selling activity, more sales than accumulation suggest ADA might face another decline. But if the price drops too much, it could trigger a rally back to its yearly peak. In conclusion, while ADA's recent performance has been rough, historical trends and on-chain metrics hint at a potential rebound. If you're considering buying, this might be the right time to start accumulating before the price goes up. Oh, by the way, the content in our video should not be considered investment advice, just for entertainment only. Investing is speculative. When investing, your capital is at risk. Before we dive into today's next market-breaking news, make sure you hit the like button and subscribe to our channel to fuel us up for even hotter content than ever. Back to the video. Ripple CTO David Schwartz recently shed light on the benefits of tokenization, a hot topic in the digital currency world that many still find confusing. Using the example of real estate, Schwartz explained that buying property involves tons of paperwork, making it hard to prove ownership. Tokenization, however, simplifies this process by using blockchain technology, making asset transfers and ownership more secure and fraud-proof. He pointed out that tokenization can also make borrowing against assets much easier. By registering collateral on-chain, lenders can easily verify ownership and check if the borrower has other loans, providing greater transparency. This system helps streamline real estate sales, record transactions, and ensure secure payments. Financial giants are catching on to these benefits. For instance, BlackRock is exploring tokenization, and protocols like Chainlink are fueling this trend with their CCIP solution. Even though Ripple Labs hasn't laid out its full tokenization roadmap, they're making moves in the space. This summer, they plan to launch a stablecoin and have filed a trademark for it under the ticker RLUSD. Ripple's entry into the growing stablecoin market shows their intent to leverage tokenization in a significant way. In summary, Schwartz's explanation highlights how tokenization can revolutionize the way we handle assets, making processes more efficient and transparent. With big players like BlackRock joining in and Ripple gearing up for their stablecoin launch, it's clear that tokenization is set to play a crucial role in the future of digital finance. Then, crypto analyst Javon Marks is optimistic about Terra Classic, predicting a potential 1,300% surge. He identified a bullish pattern that could see LUNC initially rise 400% to 0.58046 and possibly reach 0.00139122 based on its historical breakout trends. Marks points to ongoing token burns, with over 113 billion LUNC tokens burnt since the 2022 crash, as a key factor reducing supply and potentially driving up demand and price. Recent developments in the Terra Classic ecosystem, like the introduction of SDK 47 and the role of all nodes in providing supply information, further support this positive outlook. Currently, LUNC is trading at about $0.151, up over 2% in the last 24 hours, suggesting there is room for significant growth. Meanwhile, the top 10 coins are off to a bullish start this weekend, with Doge showing a 2.38% increase in the last 24 hours. Analysis suggests Doge's price is currently stuck in a narrow channel, bouncing between 0.1627 support and 0.1697 resistance. If it breaks above 0.17, it could head towards 0.1750. However, larger timeframes show no clear dominance from buyers or sellers, indicating sideways trading between 0.16 and 0.17 is more likely for now. Traders are advised to keep an eye on the weekly bar closure, as it could signal further upward movement towards 0 to 18, $0 to $20, if it closes near its peak. Doge is currently trading at $0.1663. The recent buzz around Floki's potential surge is all thanks to its listing on Coinbase, a move that could give its price a significant boost. Despite a 3.5% increase in the last 24 hours and positive indicators pointing to further gains, Floki's overall sentiment remains bearish, with social volume on the decline. However, the Coinbase effect, known for triggering bullish price movements upon listing, might just turn the tide for Floki's fortunes. The excitement surrounding Floki's Coinbase listing isn't without reason. Past instances have shown that such listings often result in a surge in the token's value, offering traders and investors hope for a similar outcome this time. With Floki's recent rally and the Coinbase listing announcement, the stage seems set for a potential upward trajectory. Delving deeper into market metrics, Sentiment's data suggests a mixed bag. While Floki's MVRV ratio remains high, indicating a bullish sentiment, there are signs of concern. Trading volume and network growth have dipped, signaling potential challenges ahead. Despite this, key indicators like the Chaikin Money Flow, CMF, and Relative Strength Index, RSI, are still pointing upwards, hinting at the possibility of continued growth. So, what are the potential scenarios for Floki's price targets? If the current bull rally persists, we could see Floki hitting $0,024 in the short term. However, a breakout above this level could propel it even higher, aiming for targets between $0,026 and $0,027. On the flip side, if the trend reverses, Floki might find support near $0,226. In essence, the Coinbase listing has injected fresh optimism into Floki's market, potentially setting the stage for an exciting journey ahead. While challenges remain, the bullish indicators and past precedents suggest that Floki might just have what it takes to defy the odds and make a significant mark in the crypto space. In the wild world of cryptocurrency, influencers often share their favorite picks, but sometimes their actions speak louder than their words. Take the case of Pepe and influencer James Wynn, for example. Despite publicly praising Pepe's value as severely undervalued, Wynn recently deposited a hefty sum of Pepe tokens to a Binance account, hinting at a potential sell-off. This kind of behavior raises questions about conflicts of interest and the trustworthiness of influencer endorsements. Meme coins like Pepe, driven by hype rather than fundamentals, are risky investments, often relying on the greater fool theory, the hope that someone else will buy at a higher price. So, before jumping on the bandwagon based on an influencer's recommendation, it's crucial to do your own research and tread carefully in the volatile world of crypto.
Alright, that's hottest news today. If you guys did find this video helpful, leave a like and subscribe our channel for more free content. Thanks for watching. Peace out.